Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 15th of December. It's slightly disappointing that the FTSE didn't manage to sustain 76.40, which was that February resistance line, which was broken quite nicely yesterday, but we've come back quite a long way. The view at the moment is that we need an end-of-day close back above that 76.40 level to give us as high as 7,800 by the end of this month. Otherwise, a test of the 200-day moving average, 75.70. beckons over the next few sessions. Moving along to the DAX, and here it's been a stellar run, whatever happens now, over the last 6 weeks or so. We've got that resistance line target that we had, the red one from May, top of the broadening triangle, 16,900, which was achieved. Looking for an end-of-day close above 16,900 to give us an ultimate target here as high as 17,900 by the end of next month. We've got support for this market basically around 16,500, so ideally that will stem any losses, and we're also only about a week away from a golden cross between the 50 and 200 day lines, so couldn't really be much better than that given the overall economic etc. situation. Moving on to the Dow, and here you can see that it has been up and away. The best case scenario was we would hit 37,800 by the end of next month. That was earlier, a week or so ago, but the market has just absolutely rocketed. Still looking for that area, hopefully by the end of this month, and ideally we stay above recent support, 36,500 on this market. Moving along to Bitcoin, which has been sort of after a wobbly start to the week, has managed to stabilize, but we're still in this rising trend channel from the beginning of October. Top of the channel there heading towards 50,000, or in fact 51,000. We're looking for that by the end of next month. And support ideally stays above the 40,000 level. That support line there from October around 40,000, or 41,000 rather. Worst case is that we would head back to the 38,000 area, which is the 50-day moving average, and also November or early November resistance for this market. Moving on to gold, and here, interestingly, the market managed to bounce above the 50-day line, which, as I said yesterday, can be a continuation signal, so that worked. 2060 has been established as resistance, and we want to see an end-of-day close back above that to give us a retest, or the chance of a retest, of 2150, which was briefly there at the beginning of the month, and then the target here, June resistance line projection, now heading towards 2190, which we're hoping for by the end of next month. Difficult to resist looking at the pound after the Bank of England let the market off the hook. We've got, we had 21.2730 as our initial target here. That was hit almost on the nose at the beginning of the month. Then it's all about breaking $1.28, and there's nothing really on the chart between $1.28 and $1.30. So 130 the target for the end of next month, especially while we're above 127 or so on this market. Once again, 50 and 200 day lines both rising, and that means we're probably 2 or 3 weeks away from a golden cross. So one would expect the price action to actually start picking up even more than it has of late. Moving along to the stocks, and starting off with the Chamberlin. Here we've had a bear trap gap reversal from below the October support there at 2.6 pence. Also gap through the 50-day moving average, 2.63. It's a typical kind of pattern there, and bullish divergence as well. So this should have all the hallmarks of a turnaround, and above 2.6 pence, the October support, looking for 3.2 by the end of next month, or even sooner on that. One of the stocks of the month to date has been DG Innovate, even mentioned in the papers, which is obviously remarkable. Here we've hit the original target there, 0.08, then 0.12, and even hit the 0.19 level. We're looking for an end-of-day close through 0.19 to give us, or end-of-week close, to give us the possibility of move up to 0.4 pence by the end of next month. Ideally, we stay above the second target there, the 0.12, 0.13 area, ahead of a move to 0.14 if we get that end-of-day close through 0.19. Moving along to a rather more difficult chart, Distil, which there's almost hardly anything to really go by, but we've got the 50 and 200 day lines rising, and looks like we've got a bull flag in the making. The top of that, that resistance line projection there from the beginning of the year heading towards 0.9, and we're looking for that by the end of next month, especially while we remain above 0.57, which was resistance on the way down. A stock which is looking interesting for 2024 is E-Star Resources, and here we've got several attempts to get through 1.5 pence, which seems to have some great significance for the stock, but above 1.5, looking for 2.5 by the end of next month. We're assuming that that 1.5 will be broken, if not on the current go, on subsequent goes, given the news flow and the also very low market cap of the company. Moving on to ECR Minerals, and here it looks as though the rising trend channel base still in force. The floor of that base is around 0.2, and we're looking for up to 0.3 pence by the end of this month, or perhaps even sooner. If you're a fan of the shares and looking for greater glories, well, the next level up would be the line I'm destroying at the moment, up to 0.41 by the end of next month, and that's on the basis of an August resistance line projection, and also that the shares would be then back above the 200-day moving average. That's around 0.37. We haven't been above that for a considerable period of time. Actually, this time last year is actually how long ago we were. So it looks as though ECR finally breaking through, especially while they're on the right side of 0.25. Next up is Eurasia, where the bears have been given a slight pie in the face once again. Obviously, they're always looking for the demise of the company, but we've had a gap close buy signal this week, one of our favourite setups, bear trap gap close, and support coming in at and above the 50-day moving average at 2.1 pence. Above that, looking for 3 pence to be broken. Obviously, we've been looking for 3 pence to be broken since almost the beginning of the year. But let's see if this time is the one. Moving on to a stock which doesn't get much airtime either here or anywhere else, Engage XR. A nice key reversal up yesterday, breaking through the 50-day moving average at 2.55 today, and the longer we stay above 2.55, the greater the chance of a move to 3.75 pence by the end of next month, or the way things are going a little bit sooner than that. Future Metals is next. That's been in the wars after, I think, the fundraise, etc., etc. Here we've got the chance that the shares are bouncing off the floor of that broadening triangle from back in May. The level in question around 1.1 pence. And the shares have gapped up, so we've actually got a bear trap island reversal, so gapping down and then gapping up. That can be a very good and strong signal, well, actually one of the strongest signals around, because it actually shows that traders have been wrong-footed, not once but twice. And the view now is that if we can get back above 1.7 pence, we're going to head back to the 50-day moving average area at 2.14 pence, hopefully by the end of next month or even sooner. But that bear trap island reversal worth looking at, as that could be a major turning point for the shares. Moving on to another relatively obscure company, Kelso. Here we've hit our target for the second time, that May resistance line at 3.4 pence. Above that, we're looking for 5 pence by the end of next month at the top of a, well, basically at that March resistance line projection. Very nice turnaround there for the shares, and ideally we stay on the right side of 3 pence ahead of 5 pence plus on Kelso. Change of name for Pires into Mindflair, and seems to have done the trick, at least in terms of the share price, with a massive move to the upside. And the 50-day moving average, now the sort of stop loss area at 1.1 pence. Above that, we're looking for 1.8 pence, hopefully as soon as the end of this month, taking the shares back to where they were in July. Powerhouse Energy, another bear favourite, but this is also managing to defy them. The old low there back in July around the 0.39 level, and that's where new support's coming again. Above 0.39, we're looking for up to 0.6 pence by the end of next month, or even sooner. And probably if the 50-day line starts rising, that will accelerate the process. But this looks like a mid-move consolidation ahead of a move towards 0.6 pence. Petrel is next, and here a sort of a silent or quiet rally on this one. We pushed through to our second target there around 3.1 pence. We've got a final target there as high as 4 pence by the end of next month. But ideally we stay on the right side of 2.75 pence in the meantime. So that is the issue on that one. Back to Rockfire, and here a nice bear trap from below the old March support there around 0.21, double bear trap in fact. Above that we were looking for the gap to be filled up to 0.36 pence, and we're looking for that by the end of next month or even sooner. Next situation is Shuka, and here we've got the ongoing rebound off the rising 200-day moving average. In fact, I think if you look closely, we've actually bounced above that 200-day line over the last week. 50-day line now rising as well, which suggests we're going into a golden cross, and that can be a very strong mean a very strong move to the upside for a stock or a market. Basically looking for up to 18 pence by the end of next month while we hold above the 9 pence support area we have seen of late. So let's see if Shuka can deliver, especially with those rising moving averages. On to the last two. The first one is a stock which has been requested, Synectics, and here the shares have had a great run. The points to note here are that the first target here was up to £1.65, which was hit yesterday. And the thing is that if you are a holder of the shares above 165, looking for up to £1.80, but ideally we stay above the £1.45 area, which was basically the old resistance zone for the shares. So above 145, still looking for greater glories for the shares up to 180, but let's see if we can get a decent end of day or end of week close above 165 in the meantime. On to the last stock of the day, which has been another bear-defying situation, which is very gratifying actually, given that we didn't actually go back below the 2 pence level in a meaningful way. Here we've got a V-shaped bull flag, which is even better in the sense that we've had a gap to the upside today, looking for an end of day close through 4.35 pence to give us the 5.4 pence target we've been looking for, hopefully well before the end of this month. Above 5.4, we're looking for a retest of the 8 pence zone, and that would be for January or February next year. Ideally, we stay on the right side of 3.5 pence in the meantime. That's it for me today. More updates over the weekend.